One of the big questions I get all the time is, what do I got to do to start a policy? Like, what are the steps? Well, it's pretty easy. And I get this question all over the place. I get it on social media, I get it out in the public, and I also get it on phone calls. People want to start a policy, but you know what? I think that's misleading. It's not the policy that's the most important thing. It's understanding the process, but it's also understanding how we design the policy to solve your problems. So when people ask me that, I always want to kind of go back and I want to say to them, I can't help you start a policy until I know what your needs and goals are. Because listen, the number one universal law is I must solve a problem for you. I have to give to you. I have to find out what problem you have. Without knowing your problem, I can't do my job. I can't design a policy for you. And I can't show you how the infinite banking concept can solve your problem. Because how can I without knowing more about you? So when we peel the curtain back and we try to figure out what is step number one, step number one is always mindset and education. We need you to understand what it is we do, which what we do is we teach a process called the infinite banking concepts, a process that allows you to take back the banking functions in your life. That is it. That's simple. And then to do that, really, I always tell people it involves changing one thing. That is where your savings goes first and adding one step, the process. The process of your money being in your control inside of a specially designed whole life policy and moving over here to whatever opportunity you're trying to take advantage of or whatever problem we're trying to solve, like paying off debt, getting all the money back for the cars you buy, drive, and own, or could be anything else. And then showing you how to be the bank, which is also the recycle, recapture around the bottom part where your money goes back to the original source. You've probably heard this before. You know, wealthy people say this all the time. Basically, there was a study or someone said this, that if all the money was given to the public, like everybody was made millionaires, in a matter of X amount of years, all that money would land back in the source where it came from, which is typically the banks. Why would that be? It's because they understand banking. They understand the process of taking back the banking functions, but they don't want you to know that. But you need to know this. So step number one would be to educate yourself, to watch a 90-minute video that we have created teaching you exactly what the infinite banking concept is. But hey, nobody wants to watch a 90-minute video. So we made it a 10-part video series. But nobody wants to watch a 10-part video series either. But what if in that 90-minute video, I showed you how by changing one thing and adding one step, you will get all the money back for every car you ever buy, drive, and own. And maybe if that doesn't strike your fancy, maybe you got some debt. What if in that same 90-minute video, I show you how to eliminate all your debt without working any harder, any longer, or taking on any additional risk? And on top of that, what if I show you how to build your wealth through your own debts and expenses, not working harder? Would you watch a 90-minute video? So when we can understand that that's what you want, then I am going to tell you that's step number one. Watch the 90-minute video that's right there in the bio, and once you're done with that 90-minute video, book a call with one of our money mentors. The link's up there in the bio as well. But what's going to happen on that call, and how can you be the most prepared? Well, like I said earlier, to be most prepared would be to know what problem we're going to solve for you. Because when you get on the call with the money mentor, the only thing that money mentor is going to do is try to understand you. They want to get to know your circumstances. They want to know your income, your assets, what you're doing to save money now, and what problem it is that we're going to solve for you. Are we paying off debt? Are we just building a policy to get all the money back for all the cars you're going to buy, drive, and own? Are we building a policy so that you can use it to go invest and make money twice on the same dollar? Are we going to build you a policy to go do real estate or lend on real estate, which would then require us to design a much higher early cash value design? What is it that you are trying to do? What is it that we can solve for you? That is what the call is going to be. But there's going to be some other things that are going to be asked on that call. There's going to be some things like, are you healthy? Do you have any medical conditions? Because obviously you have to go through underwriting and we have to get you approved for, yes, a life insurance policy. So the underwriters are going to look at this very differently than we are and than you are. They're going to want to know if you look as good on the inside as you do on the outside, because you're definitely a good looking guy and a beautiful woman, but like on the inside, are you healthy? What kind of medications are you taking? How is your family's health history? These are some of the questions that will come up so that we can then design a policy with the right rating in mind. Even if you're not healthy, that's okay. But we just want to build that in so that we're not showing you a plan design that doesn't come through at the end the same way we showed it. We're going to try to get as close as we can to that. But that absolutely requires us knowing a bit more about you, your financial situation, your problem that we're solving, and your medical history. Not all of it, because we don't want to get into the HIPAA stuff, but just high level. Are you healthy? Are you a smoker? You drink a lot, maybe one too many? Those are some of the things we're going to want to kind of uncover. And don't think that that's immediately going to decline you. It could, but we're going to tell you whether or not that's the case. So here's some other things on the call that I really like to talk about. You see, on the call, the money mentor is going to be able to listen to you, and while they're listening to you tell them all this, they're taking notes. They're putting notes down because in their mind, they're starting to formulate a solution to that problem that you're telling them. And they're going to start formulating a solution based on your needs and goals, not what they think, because it doesn't matter what we think. It matters what your circumstances are. And we call this suitability. We're literally doing a suitability review of you. Like, is this a suitable thing for you to do? Is this product, the specially designed whole life, suitable for your needs and goals? And if it is not, well, we're going to tell you that this won't work for you right now. And have we done that? Oh, you bet your butt. Because I tell all of my money mentors, it is most important that we know who our client is not, so that we then can understand who our client is. So let me just hit some of the things that would be knockouts. Who is not our client? Our client is not the client that's looking for a get-rich-quick solution, because this is not that. This is a marathon. This is a get-wealthy-long strategy, not a get-rich-quick and lose it all quick, or however you want to do that strategy. The second thing that we also will understand is figuring out, can you actually save enough to make this strategy work? Now, what is enough? A lot of people don't know what's the minimum to start this. It's simple. How old are you? Okay, you're 40 years old. Great. Add a 0 to that age. So 40 plus 0 is 400. And then add an M after that. 400 a month. That's your minimum. 10 times your age. Now, 10 times your age works as a good barometer to know what your minimum is, but it only works as a barometer if you are older than 20 or less than 60. So once we go younger than 20 and older than 60, we want to use a 15 times rule. So what you would do is take your age, multiply it times 15. So let's just say you're 60. I'll just do it with you here real quick. It's pretty easy with a phone. You just grab 60 times 15%. Okay, so what is that? 69, so 690. So let me just show you the math behind the 15 times age. It's pretty simple, but it's easier just with a calculator because the 10 times is really easy. We just add a 0 after your age and that's your minimum monthly. But for 15 times, we got to kind of go in and we got to take 60 and then just do times 15. It's $900 a month. So that's 15 times your age would be $900 a month. So in order to do the infinite banking concept with the specially designed whole life, it would require either 10 times your age minimum or 15 times your age if you're under 20 or over 60. So that's your barometer for the minimum. Now, let's take a pause for a second, because what I want to do is I want to ask you all to help me out. I want you to solve my problem, and that is simple by clicking that subscribe button. And while you're at it, there's a little bell up top. Smash that bell so that you're notified every single time I put out new content. Now, back when I was young, I was in karate, and we learned all sorts of things, but one of my favorite things was this thing called the Impkin. Okay, see this? I don't know what that means in Japanese, but it's this. When you punch somebody, you do the Impkin, which basically you wrap your fingers around your middle finger. Makes for a nice little swift, sharp punch. So we're just gonna try that, and I'm gonna aim to make sure that this Impkin nails Jordan, who's manning the camera. So, ooh, all right. Well, I missed him, but only by a little bit. So let's get back into this whole strategy of you taking back control of your money and by you becoming in the bank. By using this specially designed and engineered whole life, that just helps the process. But so many people want to put so much emphasis on the product. When they get on a call with us, which again, you can watch the 90-minute video above and book a call above, but when you get on a call, let's not just talk about the product. Everybody wants to talk about the product. Oh, the magic product where I'm going to change and put my savings. The product is not going to make you wealthy. There, I said it. The product will not make you wealthy. It will make your money work smarter. It will make your money work harder, and it will certainly allow your money to work in its most efficient capacity in a tax-free environment. But the policy is nothing more than a machine that we take our savings and we run it through it. Kind of think of a wood chipper, but it's not going to chip your money up. And you put the money into the machine and it spits it out the other side at a faster velocity. That's called uninterrupted compounding interest. And it's also the only place where we can put money and earn interest and dividends on it while still using it, because of the loan provisions within a whole life policy, or pretty much any permanent life insurance policy. But the whole life works the best for IBC. So on that call, we're happy to talk about the product, happy to talk about the different designs of the product, because there are many, many different ways we can design and engineer your policy to solve your problems. But so many people think that the product is the everything. It is not. It is the process that is the everything. It is the process, first and foremost, that will make you wealthy and keep you wealthy. The product just helps. So when we're talking about the product, let's spend less time on the product, more time on the process that will actually solve your problem, and let's make sure that you listen to what the Money Mentor suggests, because the Money Mentor has done this hundreds, maybe even thousands of times. They are going to know the best design to solve your problem. So once you tell them the problem, not only are they writing it all down, but they're also keeping tabs of what design they should do, because then after the call, what they're going to do is they're going to design the policy for you. They're going to design it around your specs, your amount that you want to save, your dumping. You have a custom designed plan. There's no one plan that's the same. We might have a couple different models that we work off of, but every plan design is specific for that individual client, you. So we'll design it to you, to your specs. We'll email it to you after the call if you choose to move forward. If you choose to put an application in, which there's no risk, you don't have to put any money in and there's nothing to lose. But if you're going to put an application in, we're going to design the policy for you, and we're also going to design a solution to your problem. And we're going to basically give you that solution, but we're only going to give that solution to you after you give something to us, and that is your time and commitment. So we will give you all that, but we will not give you those deliverables until after you sign the application and get your medical done. Why would we do that? Well, because we've given so much to you up to that point. We've given you our time, our Money Mentor's time. We've designed your plan for the problem that you told us about it. And not only that, we're going to give you the fully customized plan that solves your problem, so that you don't just see just the policy numbers, you see the policy numbers in action in the proper infinite banking concept strategy to solve whatever it is. If it's paying down debt, we're going to show you what that looks like. If it's buying cars, we're going to show you what that looks like. If it's lending money or investing, for the most part, we're going to show you what that looks like. It's called our custom reports, and each one has a different name. But we're not going to give that to you until you finish signing the application and get your medical done, because then we know you're serious, and then we know we've got a good chance of solving your problem. These are the different components that go into a call with the Money Multiplier. And a call with the Money Multiplier, I will tell you, will never be this. It will never be a sales call. It will never be you getting on a call and us trying to sell you something. None of my money mentors will try to sell you anything. They are trained not to sell. That sounds backwards, doesn't it? Well, it isn't backwards at all. Actually, it's right ways. It's, there's backwards and there's forwards, and then there's the right ways. I call this the right way. And it's the right way because if we can demonstrate that we can solve your problem, if we can show you firsthand how you can solve your problem by changing one thing and adding one step, we feel you should ask us to help you, because we hold the secret sauce, the secret solution to solve your problem. So just ask. Ask us to help you get started. My money mentors will not ask you if you want to buy something, but you will ask us to help you solve your problem. With that being said, folks, I hope you enjoyed this episode. Don't forget to click that little subscribe button and that little bell so you're notified every time I put new videos out. And hey, while you're at it, why don't you check this video out right here? This video is how to design an IBC policy, and this is the updated one. It'll show you exactly what those different designs are, so when you go into the call, you have a little bit more knowledge. Thanks for joining us for this episode. We'll see you on the next one.